Hey everybody, it's Jeremy Whaley here, and maybe you've heard it said there's nothing new under the sun. Or maybe you've heard that history has a tendency to repeat itself, or maybe if it doesn't repeat, at least it rhymes. I want to show you something really fascinating in this video. That is a comparison of the stock market in 2008 and 2009 as we went through the financial crisis of 2008 and how it compares to where we are right now in 2002. I think it might blow your mind, so check it out and let's go. Hello everybody, it's Jeremy Whaley here from Trade Maestro. I hope you're doing fantastic. I'm going to try to keep this video pretty short because I want to share something with you about a comparison of the stock market in 2008 and 9 and 2022. This is something I've shared a lot in the past, but it's usually part of a bigger analysis, and I want to give you guys a video that you can share with your friends and your neighbors and show this really fascinating comparison. So if you've never seen this before, hang on, you're going to be pretty blown away, I think, as you see these comparisons. I'm going to put it up on the screen here. What you're going to see right now is the stock market in 2008. So this is the S&P 500 as it showed up in 2008. You can see down here at the bottom is 2008. What a lot of people don't realize is the market crash of 2008 actually didn't begin in 2008. No, it was around September, right over here, when the media finally picked up on it and actually started calling it a financial crisis. But the real bear market actually began way back here in October of 2007. Okay, that's the first thing that you need to note about this bear market and this crash of 2008 is it did not happen in 2008. It started in 2007. That's the first thing to note. Second thing I want you to note about this is I want you to note the pattern. As this downtrend began, look at how it started to pick up. This first phase of the bear market, we had 1, 2, 3, 4 peaks inside a pattern that we call a channel. This is a descending channel. And you can see as I draw through here how the trade, how the market was just moving down, and it would bounce and it would move down and it would pull back up, move down. And that was essentially the pattern that we were following for months. It went on from October of 2007 all the way into July and August of 2008. And then the bear market kicked in and everybody figured out what was really happening. Now, up until then, I want to show you some interesting stuff here. If I come back over here and kind of make it big so you can really see it, look right in here, the value on that for the S&P was 1,100, okay? Up here at the top, the value was around 1,550. I'll put that down over here. 1,550. So if you did the numbers on that, and I'll just do this math for you really fast here. I'll pull up a calculator, my trusty old Apple calculator. So we're going to go 1,550. I know I didn't write that very clean, but 1,550 minus 1,100. That leaves you with a difference of 450 points. So we're going to take 450, divide it by 1,550, because that's where we started the index, and that is a 29% correction at this point right here. Okay, so I'm going to just draw big arrows right here. And at that point of the bear market, we had already sold off 29%. Now, I'm making a big deal about this because if you can remember back to 2008, if you were paying attention to the markets back then, the media for the most part was not talking about the bear market. We had the most expensive gas in history. It was ridiculous. We were hitting $4.50 and $5 a gallon. Hello, what's happening right now? Okay, we really expensive gasoline. Housing market had peaked. Housing interest rates were really high. Houses that people have been paying way too much for were starting to crash. We were getting ready for this big foreclosure market and all this stuff that was happening. And the media, for the most part, was just all bull, bull, bull. Market's going up. Market's great. Okay. And then we got into August and then September of 2008, and that's where the bottom fell out. Okay. So I'm going to now kind of zoom in on 2008, September of 2008, and show you what happened in here. And I'm sure you can't see it on the bottom of the screen, so I will just draw your attention to it. There's September and October of 2008. So right here, this was the beginning of September 2008. And you can see what happened. We kind of slowly started to ramp up. And then the last week of September, which was right here, okay, there's September 23rd. The last week of September and the first 2 weeks of October, this is when the crash of 2008 happened. That's when we went from 1,100 on the S&P down to below 850. Okay, so we gave up like 20-something% just in a week and a half right there. Okay, now why am I making a big deal about this? I want to zoom out and I want to draw some more points for you to make a note of here. Notice this peak. This was the beginning of September 2008. It was our fourth peak, right? Okay, now I'm going to switch. I'm going to come now and change my chart. And what you're looking at right now is 2022. This is a current chart for the S&P 500. And what I want to draw your attention to is boom, boom. What do you see? You see yet again a descending channel, okay? You see that descending channel that's running through there? All year, all of 2022, we've been in a bear market. People keep saying to me, Jeremy, I can't believe the market hasn't crashed yet. It's been crashing all year. We've been in a bear market on the S&P since January of 2022. If you go to the NASDAQ put its high in November of last year. Okay, so people are sitting here saying, Jeremy, why hasn't the market crashed? And I'm looking at it, I'm like, it is. It has been. It is right now. If you look at the sell-off point where we are right now, this is 25.5% to the downside from our peaks that we had in January. Okay, now how similar is that to what we had in 2008? At this point in 2008, we were down almost 30%, 29%. We're 25.5%. We're only a couple percentage points off of the same amount of correction that we were at this point in 2008. Isn't that crazy? And then here's the thing that very few people are talking about, but it's really important to know. Seasonally speaking, September and October are the most bearish months of the year. This is when more selling happens than any other time. And I can't really explain why. It's a seasonality that we refer to in the market. It just seems to happen. And it's almost every year in September and October, we have very bearish markets. So with that in mind, let's just take a look here. I'm going to come back over to full screen so you can see it. And I'm going to kind of zoom in. Well, that didn't do a very good zooming in job there. Okay, if you look, I'm going to have to zoom in more here, sorry, since it's uncharted territory that we're kind of looking at here. All right, so if you can see the dates down here at the bottom, which I'm sure you can't, this is September 23rd right here. This was the same week from 2008 when all the bearishness happened. What just happened this past week? We just gave up like 10% in the last week and a half. Isn't that crazy? 10%. I believe that we are in the next phase of this where we're going to be giving up for the next 2 or 3 weeks. Really, really big momentum. And what you're seeing happening right now is exactly what we saw in 2008, where finally the media is saying, okay, yeah, I guess we can't ignore it anymore. We're in a recession. Yeah, the bear market really is real. Yeah, we were wrong. The bulls are gone. And yet, if you were paying attention, you knew this was happening in January. And maybe you're looking and you're like, well, I didn't know that. But you could have known that if you just knew what to pay attention to. As King Solomon once said, there's nothing new under the sun. Markets repeat. Markets are always moving through cycles. Everything in the world is always moving through different cycles. And if you learn how to recognize them and learn how to just kind of observe what's going on, what you'll be amazed at is how often those cycles, not only do they repeat, but they're very, very predictable. So where are we at right now in the market and what I think is coming? Well, I'll go ahead and give you, I'm sure you've probably already seen some of my other updates and stuff, but I'll give you, for those of you who maybe haven't seen this before, I'm going to kind of shock you a little bit. Our next target for the S&P 500 is 3,200. Okay, this one should be a pretty easy one to get to in October. The next one, and really the big one, is 2,200 for the S&P. And as it relates to the S&P, there's a pretty decent chance we'll get there in October. It may not look like we will on the chart here, but that's exactly what happened in 2008. In fact, I'll make that correlation for you right now as well. So if we target 2,200 and say, can we be there before the end of October? Well, starting with where we started up here around 4,800. on the S&P. Okay, so 2,200, that would be just a little bit more than 50%. Okay, so let me get my trusty calculator out here. So we start off with 4,800. If we got to 2,200 by the end of, well, at any point, that's 2,600 points. We'd started with 4,800. So that would be a correction at that point of 54%. Okay, just so you have an idea, I'm going to show you what that correlated to in 2008. So you can see if I'm really crazy. Could we go from where we are right now down to 2,200 in the next 2 to 4 or 5 weeks? Could it be that extreme, what I just drew on the chart? Well, it could be. Let's come back over to 2008 and see what happened. So in 2008, if we went to that same rough time period here, the end of September, well, let's go to, so by the first week of October, we were at 835. And then by the first week of middle of November, when that first major wave of bearishness was done, which was right here, we ended at 750. So, because that's really what we're talking about comparing here. So having started at 1550 to 1750, what would those numbers be? And the answer is 1550 minus 750. That is a difference of 800. Divide that by 1550, so we get our percentage, which is 51.6%. Come on, pen, don't quit on me now. 51.6%. Okay, that's how far we went from October 2007 to this part of the bottom. And then we still ended up giving off another 100 points in the last wave of bearish selling action here. Most of that was done by October 10th. Okay. Now, you can just, I'm not saying that we're going to give up specifically those percentage points. Okay. But you can see we're very, very close within range. Very, very close. Just a couple percents here and there. You can see that at this point in the 2008 market, we had already given up 30%. And at this point right now, we're already at 25.5%, 2022. Okay. So is it possible? Is it plausible? Is Jeremy crazy to say that over the next 3 weeks, by the end of October, beginning middle of November, we could be at that 2,200 level? Well, it would only represent a 54% correction, which is only 2 points higher, 2% higher, 3% higher than where we were in 2008 at that same point. So yes, we absolutely could be there. It seems strange. It seems far out there, but it's not. Okay. So again, I'm just going to reemphasize this. I'm actually going to turn my lines on, which I had turned off for you, but I'm going to turn them on here. 3,200 is the next major target. And if that does not hold as support, get your eyes fixed on 2,200. This is a very real target for the next 2 or 3 weeks, 4 weeks, 5 weeks, somewhere in the near future here for the S&P. If you've not seen my targets for the Dow Jones, let me give them to you really fast here. This is the chart for the Dow Jones. Same theories, basically. I'm just going to hit you the targets here. The next major target's 26,500 for the Dow. And the big one is 18,000. And I actually think it can go all the way down to 12,000 after that. I'm not saying it's going to, but it very well could. And just so you have some NASDAQ numbers to look at in case you're looking at trading the Qs or something related to the NASDAQ, the next major target is right at 10,000. I don't think that's going to be a problem to hit at all in October. And then the big one, 7,000, okay? So that kind of gives you an idea of what I'm thinking over the next, 3 to 5, 6 weeks. And you can see that I'm not really crazy. In fact, I've used a lot of this model since last November. I'm not going to go so far as to go rehash everything that we shared with you back in November, but this model has been in play remarkably accurately. Remarkably accurately. That was probably some Southern English slipping in there. For those of you that are watching from the UK or maybe a different part of the world, those of us who live in the South, we make up English as we go. Anyway, no, this model has very much been in effect. It's been working remarkably well. And even to the point that in many cases, it's within a week or two of the same calendar dates of where we were in 2008, which is just shocking. I can't really remember a time that I've seen something that followed the model that closely. So, yes, I do believe September and October. I mean, we've already seen September is extremely bearish here. Let me see if I can get the numbers for you on the Dow. If you did not know what we completed in September here, that number was almost 9%. Almost 9% that we gave up on the Dow this month in September, and now we're picking up October. Expect it to be a very bearish month. That's all I can say. Expect it to be very bearish. Now you kind of have an idea. You have a model. For those of you who are just now figuring out what's been going on and you're just catching up with some of this, look, here it is. I've just laid it out for you. I've done it hopefully as succinctly as we possibly can. And I got all that done in 15 minutes. So listen, if you're not subscribed to my channel here, get subscribed right here on YouTube, Trade Maestro. You can check me out at trademaestro.com. That's my website. And give me some comments. Let me know what you're thinking. What are you looking at? What are you worried about? Because I'm happy to do some videos to help you guys with some ideas of how to navigate some of these bear markets. I have a 3-day training I did a few months ago called Bear Market Survivor. And if enough of you would like to see that, then I'll bring that back and I'll share that with you as well. But let me know what you're worried about. Yes, it's a storm. It's a financial storm. It's happening, but doesn't mean that you cannot survive. You absolutely can survive, but you're going to have to think a little bit differently about it. So let me know what you're worried about. Let me know what you're thinking. Put it in the comments below. And like I say, subscribe so you can get all my updates. I do market updates at least once or twice a week, depending on how crazy the market is that week. And I like sharing it with you. So let me know what you think about that as well. And of course, I'm putting out all sorts of other interesting videos that will help you during this crazy time period. All right. Thanks for watching. Hope you've enjoyed it. And until next time, happy trading to all of you. We'll talk to you soon.